Final panel discussion for the day on the topic Fintech Race for Bharat. As India's financial landscape evolves, a new race is emerging, one that seeks to bridge the gap between traditional banking and the underserved regions of Bharat. And this race isn't just about technological innovation, it's about crafting solutions that resonate with the diverse needs of a vast population. And to understand how fintech companies are navigating the unique challenges and opportunities presented by Bharat's diverse market, I would request Ritu to kindly come back on stage to moderate the session. May I also invite the panelists on stage, Srinivasu MN, co-founder BillDesk, Lizzie Chapman, co-founder Swiffylabs, Shinjini Kumar, co-founder Salt. I believe she'll be joining us shortly. Anand Kumar Bajaj, founder, MD and CEO of PayNearby. Shinjini, welcome. And Kunal Shah, founder of Cred. Ritu, over to you.
Well, the topic for our discussion today, the Fintech Race for Bharat, it's not just a fancy trend. It's a theme that's really redefining the financial landscape in India, particularly that very vast rural and semi-urban market that we collectively refer to as Bharat. More than 65% of India's population resides in these non-urban areas. And so Bharat really represents that massive opportunity for fintech companies to really exploit. But catering to this diverse and largely underbanked population, it comes with its own set of challenges and, of course, opportunity. So today we have this exceptional panel that's here with us to help us understand, what kind of innovations you all are driving, to reach this rather underbanked or unserved segment of the society. Anand, if I would start by asking you to just differentiate for us, finance is finance, right? How do the needs of Bharat differ from the needs of India, and how are you as a fintech helping bridge that gap?
Finance is a finance, but sachet is a sachet. So what you can consume in 100 ml, probably a 20 ml or 10 ml is relevant. What you and I take it for granted on digital is actually not even a dream there. So the digital divide is only increasing with the digitization in India, leaving behind Bharat. So that is where we are starting actually to bridge the digital divide between rural, urban, Bharat, India. And there is lot to do.
Well, Shinjini, to just take that forward, this digital divide between the haves or have too much and the have-nots, especially when you look at the underbanked segments of society, there are certain marginalized sections that would not even have the access to a smartphone or the technology to undertake this digital transformation. How do you specifically, using technology, are able to cater products for this segment?
A couple of things. One is exclusion is not necessarily always on the lines of poor versus rich. Exclusions cut across societal strata. And one of the things I have learned, with a lot of humility, I have to say this, after 30 years in mainstream banking, when I decided to get into building a startup and I decided to choose to focus on women, I kind of took it for granted that if the women have smartphones and if they're shopping on if they are on social media, they're shopping, they have education, because India is one of the countries which has some of the highest levels of education for its women, and a lot of work has been done in that space. So just galvanizing that availability of all of this infrastructure and putting finance on top of it, like Anand says, sachet can just reach anywhere. I think I differ in that, because productizing for excluded categories is not as easy as taking a product and changing its size or packaging. It is a lot more work to actually understand friction and that user's psychology in the case of not just gender, but in many ways. And because I've just come from my village after 2 weeks of very, first of all, heat, but various other things. And the kind of things I've learned are just unbelievable. I mean, I met a girl who's been saving in LIC, which is one disease that this country has, just doing it for 10 years, and now finally realizes that she may not be able to get any of that money back because her maiden name is completely different from her name after marriage. And when Aadhaar gets made, then she gets a different name and a different date of birth. And then the money that she has been depositing all along, because there is an agent in between who's been taking that money has been deposited, and now her account is frozen and she can't possibly get that money back. It's her life savings. And that's not the kind of problem you can solve by size or packaging. So I'll just start from there and we'll go through it.
Well, Lizzie, if you take that forward, I mean, you know, pink products, sachetization, is that going to solve the problem for half the population of the country?
No, Shinjini's completely right. If I'm honest, I think actually the fintech universe has a little bad scorecard when it looks at how we have solved this problem. If we leave aside UPI, because I think we can all evangelize UPI all day long, if we leave aside what we've seen in payments in the last 10 years, outside of that, fintech as a category has been quite poor at solving these fundamental problems of how we distribute these products. So in our new avatar, which is a company called Swiffylabs, we actually partnered with Geo because we said, who is it in this country who understands scale, who understands distribution, who understands, you know, efficiency at scale and high throughput, and how can we use those rails and that type of technology to finally crack some of these distribution challenges that we're talking about? And what we're doing is working with the banks and building core infrastructure, because what we realized is that we need banks to be at the table for fintech to work, and we need infrastructure that can actually genuinely power these new products that we're all imagining and devising. It's no good to stick a layer on top and create a nice app and a nice website if the fundamental underlying technology has not been designed in a way that can handle, you know, 100 2-rupee transactions per day.
Well, often the reason we hear from larger players for, you know, not being able to serve some of these marginalized communities, the, you know, the very last mile customers, because it doesn't make economic sense. Is technology bridging that gap? Especially, you know, DPI has been touted as this game changer. Yes. Account aggregator, something that's not probably picked up much. Yes. ULI still in the works. You know, ONDC starting with financial services. UPI perhaps has been the only star.
That's exactly it, the acronym game. It's fun, isn't it? So we love all these new developments. We get to do these wonderful MOUs and presentations at GFF, and it's very, very exciting. But how many banks are actually using these to the full capacity? That's the question. And that's where we have to do the hard work. There's a lot of work to be done. The core banking systems of most banks in this country were not designed to imagine something like account aggregator. It's absolutely unfeasible to imagine pinging a ledger, you know, thousands of times a day. That wasn't envisaged 30 years ago. So it's actually up to us to work together to build the technology that can make these visions a reality, because we really do have some of the best digital public infrastructure in the world, but we're not utilizing it to the full capacity because we're not investing in the technology bridges that Anand mentioned.
Well, then, you know, let me ask the two gentlemen there in payments. You know, the next layer of credit unlocking, really, you know, for the ecosystem. While you're not doing, you know, you're more focused on payments, but let me still ask you as an industry player, this buzzword I'm sure you've heard across the 3 days at the Global FinTech Festival has been unified lending interface. Just help us understand again, I mean, is this going to be the game changer that we've all been waiting for to get to that last mile customer and to not just over leverage, you know, just the urban customer?
I'll go at it first so that I can react to what you said.
No. Kunal, if you'd like to take it, and then maybe Srinivasu.
I think first of all, it's important to address a couple of points made earlier about understanding. We use the word digital divide but I think the interesting thing to see is that how many customers are on UPI and how many are not on UPI. It's an easy way to kind of split the country.
400 million unique users.
Yeah. Now, when we look at the exclusions, what Shinjini talked about, let's say we have children, women who are not actively participating. In India, we always divide these things of money transactions were done by the men in the family, and we also see this even in credit card bill payments. Women's credit card bills are actually paid by their husbands or their parents, and it's an interesting pattern that it's very deep in our society, right? So these are some other exclusions that we have, but the key point on understanding is that technology does not create a motivation. Technology fulfills a motivation. if you do not have enough money, you are worried about how do you live, survive, eat, versus, oh my God, how do I bank this more efficiently? So we need to understand that just by bringing the costs down, we have brought costs down to a level that is almost hard to sustain at. And the thing is that we have to understand that the user motivation needs to match, because we have probably got the cheapest data. We have access to all the smartphones in the world at all price ranges.
I was waiting for one of you to start telling us about those numbers. The number of mobile phones and the smartphones.
No,
that
I'm not. I think every data is out there. It's just that we often miss the point of consumers' motivation to do certain things. Telco did not need as much because people's need to connect with human beings was so deep that it just worked out in the smallest SIM cards here and there, and we've got so many people on it. So it's about matching the motivation versus trying to say that, hey, there is a fintech opportunity over here, and also sustainability of these customers. It's not that people are saying, oh, I don't want these customers. It's just that these customers are very hard to monetize, very hard to lend or collect from. And coming to the ULI question, it's too early to talk about. We have still to figure out what it is and what it's going to build. And I think it's every single thing digitally will become big. But the simplest idea I have, 99% of the country is on prepaid phone connection. For most developed countries, it would be less than 1%. If you can just give credit for talk time, we'll probably take the country forward in a different way.
Are those all the reasons why you choose to cater only to the 750 CIBIL score and above, the urban affluent customers, which the CA referred to as, the goose that keeps giving the golden egg? You're over-leveraging, overplaying that card.
No, it's just that there are just too many players serving the whole country. And
Too many players serving the whole country.
Especially the global companies who are actually quite good at doing that with their ability to deploy capital behind it. And I think for companies who are trying to live with investor capital who are expecting return, it's good to kind of make money and be profitable.
Okay. We'll get back to you in just a bit. But Srinivasu, I believe you have a different view of how the whole unified lending interface may play out. Borrower, sure, it may be good, but how does it affect your life?
I'm first going to react to a couple of the observations they made, including questioning whether there is a golden egg and whether people don't look at the bottom of the pyramid because it's not economically viable. I also believe
let me just put
top of the
context to
pyramid
that
itself
again.
is proving tough to be viable.
Okay, just a quick context to that, because we had Jairam Sridharam of Piramal Finance just tell us, 10% of all the digital borrowers at any point of time have 10 active credit lines. So that's the kind of over-leveraging we're talking about.
Absolutely. So I think to the theme of the discussion, right, I think one point I want to state, to the point Anand made, I think there is a need for a sachet. I agree with the points made. How you define the sachet and its delivery is going to be a huge differentiator. I used to work in FMCG earlier before starting here, and I can tell you this, one learning I took away from there, you cannot cater to Bharat sitting out of Mumbai, right? I think that's one learning of many years ago, and I think that's a point Shinjini was trying also to make. We can talk all we want, Bharat doesn't get delivered from here. It's a whole new way of thinking culturally, ethos, organization, people. The cost structures and the price of delivery are economics. But what does that market need is not going to be solved here. That's one point. But to the two specific aspects around lending and payments, I do think the top end of the market itself is stressed. I mean, we've heard even the earlier panel speak, 8 crore tax-paying population trying to cater to 140. So anybody trying to serve India, it's a tough thing unless you find niches and you're kind of able to make your profit pool. Still, there's a discovery of that market. That's one part. To the construct of the need that there is a big need for lending, underserved markets and delivery. There is a view, one should question why the need for ULI, right? There are enough fintechs trying to do cater to that market. There have been account aggregators for nearly 5-6 years trying to bring data to the table that helps address the market. So one should look at Why ULI? Who thought of ULI? Who pushed for ULI? How did ULI come about? What
Please answer all those questions for us.
No, I think that's, as Kunal pointed, those answers that will emerge over the period. But I think the need that was felt was a regulatory platform perhaps is going to help accelerate meeting the need, because there are multiple players trying to solve for different parts of the chain the way they define the problem. And as like Jairam pointed out in the earlier, or I think maybe it was Asim, who said it's the elephant in the room. Each one can have a different point of view. At this point, I think the regulator has a point of view that going from the success of UPI, if you create interoperable standardized platform, maybe it will help accelerate something. There is always going to be a plus and a minus to what it will achieve, right?
Let me ask you to elaborate on that point about the account aggregator not picking up and why ULI will be any different.
I think, I mean, my view, I'm not involved with either of the businesses of account aggregator or ULI, let me stay there upfront, but I do think the account aggregator model, 5 or 6 or maybe 7, 8 private companies trying to aggregate data from large regulated entities is not something that's taken off smoothly or in quick time. The need for that is there, right? And most fintechs have gone back to regulator and other policy makers, stressing the need for availability of data from incumbent large players for them to build their business. So obviously, if a regulator or policy maker keeps getting input 50 times a day from 50 different people, they think there is a need, and then they look at a market which says it's not delivering. Maybe there's a need for intervention to create a standardized platform, and that's where we are today. And so hopefully that plays out well.
Well, hopefully that does play out well. Anand, I wonder if you share the view.
See, I totally agree. And I would tell you that I was just asking Shinjini, the ULI sounds like a BBPS moment to you, Vasu? Everyone having billers connected directly to you, and then suddenly the regulator comes with a BBPS. So whatever is playing well in the industry, boys, get aside, I will do it now.
It could well also be a UPI moment, so.
There you are.
Oh. Okay, sorry, finish your point here.
No, so the point that I was making is, see, the regulator is putting guardrails. Before that, it allowed lot of experiments to happen. Lot of that has been incorporated in the guardrails. There are certain customer-friendly measures that the regulator wants before the scale to happen. We say stability before scale. Automate or eliminate, because unless you automate, you can't scale. But before scaling is a responsibility in any sector. And before you scale, you have to stabilize the things. Before stabilizing, you do all your experiments. So here is a regulator, here is the government wanting a lot of things to be experimented. The angel tax has been waived, more and more encouragement for the startups to receive that fund so that more experiments are done. But after that Samudra Manthan, there will be a wish coming out, and then there will be Amrit coming out. So I think we all have to go through that grind. Liz, I don't know the poison and the nectar that if you have heard the story, but that's the whole idea. And every evolution, Kunal, and you said it well in a podcast, that a monorail mode like a religion will scale faster, but it is very fragile. One flick and the whole thing collapses. Fintechs are in a similar way. Unless you are centipede and doing 10 things, you would be dead twice or 10 times already. And look at just a while ago, not in India, in Bharat, where things are not viable, in isolation. Here we stood as Nearby Technologies saying, Har Dukaan Digital Pradhan. The retailer is the harbinger of digitization for the nation, for the upliftment, and we took multi-modular architecture through them to the Bharat. What we did was build a railroad and then put a Malgadi, Sawari Gadi and Rajdhani now running on it. Every transaction is viable. So instead of burning lot of investor capital and then not being able to make money, before you start making money, there is someone else who comes and burns money. We chose a path of earn and burn. So every transaction is unit economics positive, and I think it's another way of doing things if you don't raise capital. Or sorry, can't raise capital. Kunal, that's a better way to say.
Well, yeah, Shinjini.
So after 3 days at the GFF, and all these questions around ULI versus OCIN versus ONDC, I was reflecting and I was thinking, this is like, जाकी रही भावना जैसी हरी बूरत देखी तिन तैसी. So credit is one thing which in financial services, from the beginning of my career, I have seen that everyone goes into into a lot of excitement about credit, because after all it is a very high profit product, right? But at the end of it, the success of your credit product depends on very few things, which is something that Kunal said earlier. There is a customer there and they have a real financial life, and their financial life is going to determine what product they're going to be able to use, what return they're going to give you, whether they're going to be profitable, etc., etc. Now, while regulators, just one thing on your ULI thing, and I really do think that the way credit is done needs to change in a country like India, which has a massive amount of poor people who don't have assets, a lot of women that don't have assets in their names. So I am very much for innovation that supports data, that supports personal data use, etc. But believe me, that is not going to happen in this way, because if priority sector lending had actually happened the way governments and RBI wanted, then we would never have needed any other intervention. So it's not your intent to say that I'm going to take this data and I'm going to put this data together and I'm going to build this platform and everybody is going to start lending on it. You have to realize that in the same market, you have different types of capital. At the end of the day, you are what capital supports you. So you have, global capital that Kunal talked about coming and, spreading it and telling, oh, everybody who has a SIM card and a prepaid gets a credit line. Then you have somebody else coming in and saying, okay, everybody who has a certain type of debt. But unsecured lending, boss, it is such a easy thing to do that you compare that, and all you have to do is to keep increasing your interest parameter. You can take any amount of losses. You can play that game for as long as the economy doesn't really tank and liquidity is available to you. You compare that to building this very sophisticated, very hardworking thing. The nature of capital that needs to support it needs to be really long-term capital. Somebody needs to say, I'm going to allow 3 years or 5 years of credit cycles to come and to create this platform. I mean, it took so much time for CIBIL to stabilize. We've all seen in our lives, right? You can't, these things don't happen like this. Oh, I inaugurated something, I did a pile, now this is the next.
We need patient investors and patient capital. Yes. Yeah, well, let me put the other two sort of new buzzwords, and Kunal, your word on this as well. A credit line on UPI. It started off in a small way. It's only linked to RuPay cards. It's only being done with some banks. But you have 60 million credit card users maybe in the country. You have 400 million UPI users. Put that together, and what does that give you in terms of solving for Bharat?
You missed an important data point, how many income taxpayers in the country as well, which is a very important factor to determine who can be given credit or not given credit. We cannot short-circuit these paths by just collecting numbers. Lending requires stability of income, because lending businesses work when you can collect and provide consistent returns to people who have given deposits to you. So for a bank, it's not that they are not seeing this. They would love to expand the base. Even the 60 million number, I think one would argue is probably a much aggressive number than what it should be, and we have to still see a cycle. When we started credit, we had close to 18 million customers, right? So in 6 years, we've already kind of tripled this number, and we have to see the cycle first, right? So I think a lot of times, any aggression on everything to do with credit comes with a lot of bad news, and it's happened multiple cycles, and we have to understand and appreciate that. But we have to truly know that unless there is consistency and stability of income, it is unlikely to happen. Doesn't matter you do RuPay, credit line, you can keep naming products differently. The principles of lending don't change.
Lizzie, would you do?
No, exactly, and I think it's actually very similar to the same point on ULI, ONDC. Ultimately these are credit enablement platforms, right? UPI Credit Line is really just another form of enabling credit to be distributed more easily. What it's not doing is providing differentiated underwriting, differentiated operational infrastructure, differentiated collections infrastructure. That's not possible with these platforms. So I think we've got to stop saying, this is the UPI moment for credit. That's a completely irrational statement, and it would be frankly unhealthy if we were to look at credit like that. Credit is ultimately the distribution and pricing of risk. and we need to understand what does risk mean. And actually what nobody talks about is how we think of different ways of packaging and parceling risk in a healthy, developed capital markets. So just putting another layer on top and bringing everybody to the party without understanding that there has to be this back-end marketplace of risk is not going to solve the problem of financial inclusion.
Well, Srinivasu, I'm going to let you have the final word before we wrap this on what, to your mind, will truly move the needle. When we talk about solving for Bharat and bringing in inclusivity, also profitability for players, because it must make economic sense for you to continue to innovate and expand. I mean, in the case of payment, the payment ecosystem, the MDR, of course, has been a thorny issue. Are those kind of issues deterrents to innovation?
As to what it takes to cater to Bharat, I think that whatever Shinjini and Lizzie have articulated, I think at first level it needs patience. In whatever you do, it needs patience. That means in every sense, patience in terms of the enterprise's outlook, the capital backing it, to the way policy thinks of it, right? To the point she made, creation of a platform itself doesn't result in an explosive growth unless it's, other factors come together. There is enabling infrastructure getting created. I think the one important takeaway from there perhaps is that there's been a very vibrant fintech sector over the last 4 or 5 years. There has been a lot of knowledge that they've brought to the table, and I think these knowledge inputs have helped the policymakers and the regulators create the enabling framework and the guardrails, right? One impact out of that is typically it's going to be whether intended or unintended is simply this, that it's going to commoditize a lot of things. Figuring out how to differentiate, to the point that she made, is going to be the key factor. At what cost do you build the differentiation? Will it play off is the other factor. There'll clearly be global players who kind of play two segments of markets, saying loss leaders versus profit markets, all that will happen. But what does it take to do? I think just patience and long-term outlook is about a key ingredient needed. Models will change, models will evolve, people will learn, regulator will learn, guardrails will change. I do think with some of these things, banks backed by good technology for fintech platforms have a better chance of succeeding in the coming years than they had, let's say, 3 years ago.
Well, on that wonderful note, I mean, clearly the takeaway is you're in it for the long run and you need a lot of patience. There's no overnight solutions for solving for Bharat. On that note, all of you, thank you very much, ladies and gentlemen, for candidly answering all of our questions and for your time here. Thank you very much.
Thank you so much, Ritu, and thank you, panelists, for closing the day with such an informative discussion. Ladies and gentlemen, a huge round of applause for our panelists here. I would now request Mr. Parag B.